AI is taking over everything chatbots, self driving cars, even how we invest. But here's the real question: should you invest in AI and Nvidia in 2025? For years, Nvidia has been the undisputed king of AI chips, fueling companies like the OpenAI, Google, and Meta. Their GPUs are the backbone of AI training, making Nvidia one of the most valuable companies on the planet. But things are changing. New players like DeepSeek are proving that you don't need ultra expensive Nvidia chips to build cutting edge AI models. And that's a big deal. If you're thinking about investing in AI, you need to hear this. In this video, we will break it all down. How Nvidia became the leader in AI chips, the real cost of AI development and how DeepSeek is doing it for cheap, whether Nvidia's dominance is at risk, and most importantly, should you invest in AI and Nvidia in 2025? Let's dive in. For years, Nvidia has been the preferred company for AI processing. Companies such as OpenAI, Google, and Microsoft rely on Nvidia's A100 and H100 GPUs to train and run their AI models. Here's why Nvidia dominates. Best in class hardware, their GPUs are the most powerful for AI workloads. Massive market share. They control more than 80% of AI chip market. Software ecosystem. CUDA, Nvidia's proprietary AI framework, make it difficult for companies to switch. Nvidia stock has skyrocketed in recent years as AI companies spend billions of dollars on its chips. However, training high performance AI models can be costly. Let's talk numbers. AI isn't cheap. Training powerful and advanced language models like the GPT-4 requires huge investment in NVIDIA GPUs. The cost of training the 2020 GPT-3 model using 1000 NVIDIA A100 GPUs range between $4 million to $12 million. And for the GPT-4, OpenAI spent more than $100 million with NVIDIA's latest H100 GPUs. Let's now consider that in comparison with DeepSeek. Apparently, in only 55 days, using 2000 GPUs and a $5.6 million budget, Chinese AI DeepSeek developed the DeepSeek R1 model, a rival to OpenAI's ChatGPT. They selected several NVIDIA's H800 GPUs instead of the more powerful H100 GPUs. Their dependence on NVIDIA decreased. For inference, they used several Huawei's Ascend 910C AI chips. Their model's efficiency improved through use of several techniques such as the mixture of experts, etc., reducing computational requirements. This changes the situation considerably. Certain AI companies may soon find they no longer need NVIDIA's priciest chips. Could this disrupt NVIDIA's market dominance? NVIDIA's dominance is based on AI companies buying its high-end GPUs, which are expensive but more powerful. However, demand for high-end NVIDIA chips may decline if startups like DeepSeek keep demonstrating that less expensive, more efficient hardwares perform on the same levels with its more expensive counterparts. And investors are already noticing this. Nvidia's stock took a major hit after DeepSeek's announcement, dropping by nearly 30% in sell off. Investors feared that if AI companies can do more with less, they wouldn't need as many high end Nvidia GPUs. What's even worse is that governments are tightening regulations. The US has restricted Nvidia from selling its best chips to China, which makes companies like DeepSeek to have to look elsewhere, and they are succeeding. DeepSeek is now using Huawei's AI chips, showing that China may develop an alternative AI chip ecosystem without Nvidia. If this trend continues, Nvidia could lose a major chunk of the AI market. But wait, does that mean Nvidia is doomed? Not really. Despite the threats, Nvidia is still the leader in AI hardware. Here's why Nvidia isn't going anywhere soon. AI companies still require raw computing power. DeepSeek may be optimizing efficiency, but they still need hardware. And the top AI players, Google, AI, and Meta, continue to use Nvidia's best GPUs. Nvidia is innovating to stay competitive. They are already developing the next generation of AI chips using its Blackwell and Rubin architecture. The AI industry is expanding rapidly. Even if companies use fewer GPUs per model, the overall demand for AI hardware is growing rapidly. So, while DeepSeek's efficiency may reduce demand for Nvidia's high-end GPUs, AI's rapid growth continue to benefit Nvidia. So, what does this mean for investors? Should you invest in Nvidia and other AI stocks? Here's the breakdown. If you believe AI companies will continue to use Nvidia's GPUs, Nvidia is a solid long-term investment. Their market dominance, R&D investments, and AI boom will continue to drive growth. If you think AI companies will shift to cheaper alternatives, it might be worth exploring other AI related investments like AI software companies, OpenAI, Google, Microsoft, chip competitors, AMD, Huawei, Intel, data infrastructure and cloud AI providers, Amazon, AWS, Google Cloud, so on and so forth. But what cannot be ignored is that in a worst case scenario, Nvidia's high end chips may see a drop in demand, but they will still start seeing demand for the less expensive categories and new releases. AI is evolving faster than ever. Whether you invest in Nvidia or not, one thing is very clear: AI is the future of technology. That's it from me. I'm Nikhil Varghese. Share this video and subscribe to learn how to make your finances less tricky with FinNiki.